So if you've ever run a small business in Israel, you know it's a labor of love. But you probably also know it's a mountain of paperwork. Well, imagine if that mountain just vanished for hundreds of thousands of entrepreneurs. A recent tax reform did just that. Let's break down this huge shift for Israel's smallest businesses.
I mean, just look at this. It's a complete game changer. We're going from drowning in paperwork and hoarding every last receipt to a simple online system with a clean, automatic deduction. We're not talking about a minor tweak here. This is a fundamental change in how Israel thinks about its smallest ventures.
You see, before this reform came along, the tax system was basically one size fits all. And let me tell you, when you're a tiny business, that one size feels like you're a kid wearing your dad's suit. It's just way too big and incredibly clumsy.
And this really gets to the heart of how absurd the old system was. Think about it. A freelance designer making, say, 50,000 shekels a year had to deal with the exact same complex tax system as a giant corporation. The playing field wasn't just uneven, they were playing two completely different sports.
The old way was a total minefield. You had to file this massive, complicated annual report. You had to understand concepts like depreciation. You were constantly second-guessing every little expense. Most people, of course, had to shell out for costly professional help. And on top of all that, the system would just automatically demand advanced tax payments. It was a huge drain on time and money that really should have been going into the business itself. So, to fix all of this, the tax authority rolled out a pretty revolutionary idea, one that was built from the ground up just for these businesses. Let's dig into how it actually works.
So the key here is the definition. This whole reform is for any self-employed person or business with an annual revenue up to 120,000 shekels, and they cleverly link that number to the existing threshold for being a VAT-exempt dealer, which just keeps things nice and simple. The beauty of this whole thing really stands on two pillars of simplicity. First, on the professional side, a flat 30% of whatever you make is automatically counted as your expenses. No more collecting receipts, no more arguing about deductions. And then on the bureaucratic side, that massive annual report, gone. It's been replaced by just two super simple online reports a year.
You know, there's a great quote from the tax authority that just nails the new mindset. The whole process is now so simple, it's basically what a salaried employee does if they pick up a side gig. They do a quick online tax coordination, and that's it. This reform brings that exact same simplicity to being self-employed.
Okay, so that's the big idea, but how does it actually play out in the real world? Let's walk through the steps, and you'll see just how easy it is.
Believe it or not, the entire process now boils down to just these three things: a one-time registration to get started, and then 2 quick reports online each year. That's really it. So first up, you just hop online and register as a very small business. It's a one-and-done declaration. The key is to do it as early as you can, because the best part is, as soon as you're approved, the system stops automatically bugging you for things like advance payments.
Okay, step 2. Once a year, you do an online tax coordination. It's a fancy name for a simple process. You basically just give them your best guess for your expected revenue for the year. That's what lets the system figure out your tax rate.
And the final piece of the puzzle. After the year is over, you log in one last time to file a short summary report. You plug in your actual final revenue number, square up any tax you might owe, and you're done. Seriously, that's it for the year.
So the idea sounds amazing in theory, right? But did it actually work in practice? Well, the numbers from the very first year are in, and wow, they tell a really powerful story.
Get this. In its very first year, almost 100,000 small businesses signed up for this. That's not just a number on a slide. That's a massive signal of just how desperately a change like this was needed. So, who are all these people jumping on board? We'll take a look. It's a perfect 50-50 split. Half are full-time entrepreneurs, and the other half are people with a regular job and a side hustle. This reform is basically tailor-made for the modern gig economy.
But this next number, this one is absolutely incredible. A full 80% of the businesses who joined this new system ended up paying zero tax at the end of the year. What that tells us is that for most of these entrepreneurs, it wasn't just about saving money. It was about getting rid of the stress and the headache of the old system.
And you know, if you look at it from the government's perspective, this is just a brilliant piece of policy. These very small businesses make up more than half of all business tax files, but they generate less than 1% of the total national revenue. So this reform dramatically simplifies life for a huge number of people with almost no impact on the national budget. It's a total win-win.
Now, the new system is super simple, but like with anything, there are a couple of key things to watch out for.
Just a few common pitfalls to avoid so you can make sure you're getting the full benefit. Okay, listen up, because this is probably the single most important thing to remember. What happens if you do step 1, you register, but then you forget step 2, that annual tax coordination? Well, the consequences are pretty serious. If you don't do the tax coordination, the system has no data for you, right? So it automatically kicks you back to being a regular business, and then you're on the hook for that old, full, complicated annual report. So whatever you do, don't forget that step.
All right, another thing people worry about is, what if I mess up my income estimate? What if I'm too high or too low?
So here's the deal. You've got about a 10% buffer. If you end up making more than 10% over what you estimated, you'll just pay a higher tax rate on that extra bit. But, and this is the pro tip, you can go online and update your estimate anytime during the year. The smart move is to check in around November, see where you're at, and just adjust the number to be more accurate.
And the system is also smart enough to adapt to unique situations, like wartime payments. It's actually pretty simple. If you got state compensation for your business, you add it to your total revenue. Why? So you get that sweet 30% expense deduction on it. But other things like reservist or maternity pay go into their own separate box. And that's really important for protecting your Social Security benefits.
You know, when you step back and look at it, this reform is so much more than just a new tax rule. It's a real shift in how Israel supports its entrepreneurs. By tearing down a major bureaucratic wall, it's empowering thousands of people to turn their ideas into businesses. And that really makes you wonder, what's next? What other hurdles can be cleared to truly unleash the creative potential of Israel's innovators?